Hello everyone, Will Hassel here once again for the weekend review and look ahead for the next week. This week we had a lot of turbulence in the markets because of fresh concerns about China and the emerging markets. I asked on Twitter if anyone wanted me to cover anything special, and this was requested. So what's been happening in the emerging markets, as we see here, I have the usual big three markets for the United States, is we're seeing a whole bunch of different currency changes and devaluation. Some of the emerging markets like Turkey, Argentina, and some other countries, some Eastern European countries, and as well as Russia. This is believed to be due to the Fed decreasing the easy money flow. So emerging market central banks are trying to get used to all this less liquidity. It seems as though the Fed doesn't really care, though, because we did taper once again on I believe it was Friday. Let me check that real quick. Yes, it was during his last meeting. So we will start off February with $65 billion a month in bond buying programs, as opposed to $75 billion. We did cut another $10 billion off. Turkey on Tuesday did go in surprise with a big lending rate hike, and what are known as the repo markets, or the markets in which different companies borrow money at a specific rate. It was at 7.75%, and they raised it to 12% pretty much overnight, and that kind of caused a big shock throughout the financial markets. That's why on Wednesday you see this kind of big kind of drop that had happened, and people are getting scared because these emerging markets some are threatening to have very long stagnations, it seems, in their economy. And other various reasons, such as China looks like it's lacking performing in its PMI. That's what caused the markets to go down on Monday. Although yesterday they did report a PMI that was pretty much in line with expectations. So have to wait on when futures open in order to go and see just how the markets are interpreting that. On Thursday, the U.S. did report better than expect, pretty much in line GDP of 3.2% GDP. This was actually, in my mind, a very good number, because what we saw was basically a GDP number with almost no government spending whatsoever. Steve Leisman, when they did report the number, said that government spending basically caused the GDP numbers to go down 0.9%. So we would have had a 4.1% GDP figure if government spending would have been like it previously was, which is kind of a good thing, less spending by the government. But at the same time, it did kind of cause GDP to go down, but that just shows that the underlying economy is doing fairly well, and that's what you see this big pop on Thursday was. And then we had the downward moves due to those concerns by the emerging markets about the Fed tapering, specifically Turkey, Argentina, and some parts of China. Some big news going to be happening this week. We have a lot of economic data. A lot of different companies are also reporting. First, with some of the bigger things that are happening, we have the Congressional Budget Office on Tuesday will release its U.S. economic outlook. On Wednesday, we have the January ADP summary and ISM non-manufacturing index. We also have the Bank of England is going to be starting a monetary policy meeting to Thursday, and on Thursday they will announce what those interest rates will be. I believe people are thinking that they are going to decrease interest rates. Remember last time we did have a decrease in interest rates. That's actually for the ECB, which will also be making an interest rate announcement. So Thursday morning is going to be a big morning in terms of monetary policy. See if they take off of what the Fed is doing, because there has been a little bit of weakness over in England and in parts of Europe. And on Friday, the debt ceiling suspension ends, and the Treasury Department says it should be able to give lawmakers another month in order to decide that. Now getting into the economic data, on Monday we have December construction spending. We are expecting a rise of 0.4% versus a last period of 1%. For January ISM, we are expecting 56.5 versus last period of 57. For December factory orders, we are expecting 0.9%. Last time it was 1.8%. For December international trade, we are expecting negative 36.3 billion, and the last period it was negative 34.3 billion. And Thursday we have Q4 productivity preliminary. The consensus estimate is 2.5% versus last period of 3%. And on Friday we have the January non-farm payrolls. Consensus estimate is 170,000 versus 74,000 last time. We have the January unemployment rate, and both the consensus and last period are expected to be are in line at 6.7%, and December consumer credit is expected to be 12.5% versus last period of 12.32%. Let's dive into the charts here. First, the Dow Jones. As we see, it closed below all of its simple moving averages, and we could see some of the little pops that happened like on Thursday because of that good GDP number, and then they kind of fell in the afternoon as we went and did tapering, as well as the QQQ, which actually did close above its 200-day moving average. This was helped out by the Google Lenovo kind of deal. We'll get into that later, though. And then the SPY did close, like the Dow did, below all of its simple moving averages. I'd also like to highlight real quick the EEM, which is the iShares for the emerging markets. As you can see here, they actually did close above most of its simple moving averages, but it has been down for the past couple days. If we look into a broader term here, you can see the big gap as consensus has been changing on the emerging markets. Going to get into my portfolio a little bit. I did active trade quite a bit this week. Well, not active trade. I kind of changed some positions around. I am long QQQ, as most of you do know. See how that's going to be Visa. So JP Morgan did nothing really to it. It did close below all of its major simple moving averages. Other banks have had a tough time as well. Here's Bank of America closed below, although it did kind of go up throughout the week. Goldman, see very much below, and see Morgan Stanley, once again below. And then finally Citi, which has been having a tough time as of recently, closed below 40. If we look at the 10-day 5-minute chart, we can see even more kind of decreasing based off of those based off of those earnings numbers that they released. Overall, still kind of happy with JP Morgan. AIG has been disappointing as of recently, but they do report earnings here. Not this week, but the next week, and we should get a better view of what they are going to be reporting. Looking at the 5-day chart, it is off of its lows, but still not where I want it. As I have said multiple times, 50 is the big psychological number for AIG. It did close below all of its simple moving averages. Going into Visa here on Thursday, it did report better than expected earnings, and I did trade this name on that day. I sold half of my position, which was only 2 shares. I know it's weak, but it was close to an $800 position. It was almost a $900 position. I sold them at $224.10. I did go and post about this. I had a stop on quote stop, and I made it a $2 change, so it did get me out before this big decline, and I am still holding on to some because I do think it will do pretty well when looking at my positions. As you can see here, it's a little baby position now, just current value of $430, Starbucks $355, which is another number that I traded. I've kind of added on a whole lot more positions that just don't have that much weighting in my portfolio. Closing down V, I'm going to get into Starbucks, which was another name that I kind of changed up my position on. Starbucks, which I did get out on. Those are the settlement dates. It doesn't tell me what days I got out. But I'll figure it out because I can do math. I got out at 71.54. So yes, it was on Tuesday because it had a big massive drop. I got criticized because I traded at $5. It did end up being a gain for me, but I saw Starbucks was kind of starting to drop a little bit more than normal, and more than I really wanted to have that much skin in the game for. I still have the Starbucks shares because I do still like the company. I do think that they're a great long-term play, and those of you that have seen my videos for such a large amount of time, I do like Starbucks. They do actually have quite a large amount of exposure to the emerging markets. We saw that in their earnings when they announced that emerging markets were way better than they expected, especially China. So with all this kind of negative emerging markets, you do kind of get a little shift in sentiment. In fact, on StockTwits, they do have a 49% bullish sentiment versus a 51% bearish sentiment. So it's kind of like that. Visa has a 76% bullish sentiment, and AIG has a 100% bullish sentiment. JP Morgan has a 55% bullish sentiment. So it did close below most of its simple moving averages. It's just really getting affected by those emerging markets. Visa down below all of its simple moving averages, and Visa is a Dow component. Going into Michael Kors, which on Tuesday was a pretty good performer. News came kind of out of nowhere. On Wednesday, we got those big kind of EM scares. It did drop low. Both the $80, $81, and $80 targets. As I mentioned before, $80 is a huge psychological number to Kors, and as well as 81, and we can really see that here because it did try and break that, but it failed to. And I kind of stopped out on 81 here on Wednesday when it stopped as well, and we can see here as well that once it broke it, it really went up. They do report earnings this week. We are expecting a gain of 86 cents a share. It closed slightly below all of its moving averages. Kors right now is the biggest weighting in my portfolio. It is. I do have it currently. I have a $1,300 position, and it's 17 shares. A little bit of a gain on it. Not as much as I would like, but I do expect it to go higher, and a whole lot of other people do too. Everyone's waiting for earnings. It's 100% bullish sentiment right now. When you look at the chart off of a longer distance, there were concerns back when I added, and I got criticized for adding. Let's do a 60-minute, 3 weeks. I did get quite criticized for just buying 2 shares down here, but ever since then, it has gone almost everywhere. But it's gone up dramatically, going up to 83 here, and then just kind of pausing right before earnings. It's kind of gotten dropped down along with the broader market, but it hasn't been as weak as most other stocks have been when it comes to this emerging market data. If I remember right, it was I think it was down Friday in trading. Yes, it was down, but only by 0.57%. The third best performer in my portfolio. And I would like to go. I haven't traded cores yet. I will probably take half of my position off when it comes to earnings if and when they do beat. I have also gotten a new position on because of all this emerging market woes. I have added the HDGE, or the hedge portfolio. It's called the bear market ETF by Ranger Equities. What this does is it shorts a number of different stocks. You can read the exact thing that says on Scottrade out from one of my earlier posts. It does constantly change the different stocks that it shorts, which I like. So it's kind of actively managed. So you do get different stocks being shorted. I remember at one point in time when I looked at it, I think Tiffany they shorted, but right now they're shorting Caterpillar, which I really know. And this was a pretty good. I got in pre-market at 1364, so it does kind of seem like pretty stupid, but it did gain 0.6% on Friday, which I do like, and I'm probably going to hold this for quite a while. I don't expect it to get in profit right away. So it's kind of there for a longer term perspective. Let's see if I can actually find that. Here it is. There actually isn't any sentiment about it, but so it's one of the it's one of the only ETFs that I found that is inverse but not triple leveraged or anything like that, and it really doesn't take a whole lot to own, which is why I like it, because I actually can't short. I don't have a margin contract and I don't have an options contract, so I do have to get short through ETFs, and it's very hard to find ETFs that aren't triple leveraged. I used to own the SQQQ, and it was triple leveraged way back when, and that just kind of whacks up your portfolio a whole lot because it is supposed to be for intraday trading and such. So I like being able to have this in my portfolio as a hedge and still be able to continue on with some long-term plays. That's why it is a pretty big weighting in my portfolio. It's just under $800. But I like having it there. It's actually the second largest weighting in my portfolio when it comes to a single stock behind cores. But I think since this year, I think we're probably going to see a 10 to 12% gain in the Dow Jones and SPY. But I think it's going to be very volatile, especially with all this emerging market news. So it is nice to go and have something like this, like a nice little hedge in your portfolio, whether it be HDG or the Grizzly portfolio, Grizzly stock, which if you can afford it, I recommend getting. It's similar to HDGE, but you need to be able to put $10,000 into it, which I obviously don't have because my total market evaluation is $4,000, and I've got about 800 in shorting. So, and I do like that on Scottrade, which actually I will pull up on Scottrade. You can go down onto, oh, that's right, I have multiple account sessions on. Let's see if I can just do it for the regular quote. You can go onto it and see exactly what it shorts and at what percentage weighting. I think if I do detailed quote, it will tell me. If not, I'll just have to read it from my desktop computer, which currently has Scottrade live on it. That's how I was able to read you the time in sales. Financials, fundamentals, technicals. Oh no, it doesn't tell you. This is sad. Okay, I'll just read off of my current Scottrade that I have open. it is kind of cool because throughout the day I did kind of click on it. I did just kind of search in Scottrade, or you can do it. It's just the way it does it. And it shows the top 5 equities held, and it shows the actual performance throughout the day of each equity. So like I can go and see IBM was down 0.38%, CenturyLink was down 1.3%, Tempur Sealy International was up 0.2%, Caterpillar was up 0.76%, and Consolidated Communications was up 0.67%. And you can see the weighting. So the percentage of all their holdings is 19% of the actual portfolio. So I do like how you can go and see all the different things that they're shorting, the weighting. Like CenturyLink and IBM are both over 4% holdings in the actual fund. So I like how you can see the day-to-day performance of what they're shorting and exactly what they're shorting. So I like that whole transparency thing that they have going on. So I'm going to start going into some of the other stocks that kind of came up this week. One of them that's been on my watch list for a while now, well, ever since kind of the beginning of the year, has been Dow Chemical. This stock has been a monster as of recently. Had really, really good earnings. Dan Loeb actually announced that he is a shareholder in it as well. And that's what kind of caused this initial boom, and then kind of got brought down, but then hit up again on those great earnings. I think this stock is going to go really, really well. I have been keeping a keen eye on it for this month. Total sentiment right now is 86% bullish, and a lot of people have been looking at this because it is such a great play on both the overall markets and the kind of the chemical space in itself. It's got great fundamentals. Excuse me. And it did close above its 21-day moving average. So it is kind of doing pretty well when it comes to a longer term perspective, especially on the 5-day chart and the 10-day chart. It did once again close above its 20-day moving average, showing and it's going to run into it a little bit, but hasn't really dipped below it except for Friday, but then got boosted back up. I do think it's a great stock to own right here. I'd actually wait for a little bit of a dip. I was kind of excited when I saw it go to 43 because that I was actually going to go and say, I'd look on getting into Dow Chem at this level because I kind of wanted it to go down ever since they announced that there's a new activist investor in there, so I wanted to go and get that kind of lower price action going on, and then then they reported great earnings, so that would have been a great trade for whoever made it. I wish I would have. But yeah, it's a stock that I think it's going to be one of those names this year that's going to be trusted throughout the entire year. So one of the biggest MMA plays that happened so far this year is Google, and this will be the last stock that I go and feature. It posted pretty good earnings, I'd say, but what really has been catching investors' eyes right now has been the deal with Lenovo and for them to buy the Motorola side of Google for $3 billion. Now, Google did buy Motorola for $12 billion. So, and with all the intellectual properties and stuff like that, they're actually not making too bad of a loss, but it's still a loss nonetheless for Google. Now, when reading about the deal, you do go and see that Google did hold on to some type of super secret patent that apparently they didn't want Lenovo buying, and Lenovo agreed not to buy it. So there is something in the works of Google, and talking to my dad, who is very big in the technology space, he says it's probably some of the voice recognition software and patents like that, and that's stuff that they've kept, as well as this kind of super secret one that no one kind of knows about. But an interesting point that when my dad and I were discussing this Lenovo Google deal was, this deal isn't done, really. It hasn't actually been approved by the U.S. government. I know this was a big thing when BlackBerry came up, and they said, Lenovo is going to buy BlackBerry, but the Canadian government actually said no, you can't buy BlackBerry. So who knows actually if the U.S. government will say yes to it or not. I mean, I don't think it's a for sure deal as of yet. I think it's just they've agreed to it now. Looking over at all the trades, looking at some of the posts on Google and StockTwits, I don't see that there's actually that they've actually really done the deal yet. It hasn't been actually exactly confirmed. So that's kind of, they're buying, Lenovo's buying where they're kind of losing assets in Google, but yeah, we could see the deal actually not be brought into fruition by the U.S. government. They could say no. I actually think they probably will say no because with all this national security thing, I don't think they want a Chinese company coming into Google, which did provide a whole lot of data for all the NSA and various things like that. So that's the end of the video. I would like to thank all of you for following me on Twitter, for reading my blog, for following me on StockTwits on Twitter. Please do visit the Leaders Investment Club blog. I do post my blogs all on Leaders as well. All my blog posts, all my videos, well, not necessarily all my position updates, but mainly mainly this video I post on Leaders. There are a lot of great other videos on there. Ben Banks does fantastic videos, as well as some other interesting stuff, like my good friend Buena, going and talking about some of the currency moves. Jeremy Wilkinson Smith does a whole lot of different currencies. He's been on the emerging markets a whole lot and has really been covering that. So I definitely go and watch some of those if you're even more interested on the currency side of the emerging markets, and not just about the stock side of the emerging markets. So I'd like to thank you once again, and I'll see you next weekend.